I'm going to just cover indexes again. I posted a video this morning on my YouTube channel all about this. But I said many times on the S&P, if you get higher, I'm really not going to be surprised. At this point, like I said, the Fed is fairly tentative, and they're saying, you know what, things look okay, and I think we're going to rise. Now, that creates a larger opportunity for traders like myself who trade in a very certain way. We're always shorting after market sentiment has brought you up, because the only time you're going to get a higher price and a far more valid short is after the move, right? If you're buying now because you think the US economy is going to explode, statistically, you will lose money because you would have done the same thing there, okay? You would have longed and it fell massively. You would have longed there massively. You would have bought there and it fell massively. And don't let me remind you that if you really bought it at the banging highs when everyone said, wow, COVID is over, things are amazing, you would have got absolutely roasted again and again and again. So don't fall into that trap. It's a myth. Buying after the highs have gone up is not a good idea statistically. Same thing there. You will always get negative sentiment after positive sentiment. After everyone has said how great everything is, everyone starts to say it's not so great after all. So just remember that, because it will save you in many circumstances. I can promise you that. Stock oscillator, in the same way, has been way up. You shouldn't be buying into this, okay? Because the more time it spends up there and the higher price goes, the more you're running the risk, the larger fall. Okay, you can already see these key moving averages here, your lower moving averages. You are now 200 points away from them. It's a long way. And as you know, price always retracts to those key MAs at some point. Those earliest ones, your 20 and your 40, are really good gauges for trends. You can see minor rejection up here, which is exactly where you had this previous fall here. Okay, so this previous fall was very sustainable, and it brought you literally in your first go, okay, before your oscillation to the upside on improved sentiment, by the way. Remember I said every time the market falls, it comes after the rise. Okay, so just remember that if you're buying into these things, you're buying into resistance, you won't make money. Okay, it is impossible over time, over the long run. Okay, that's where variance and probability comes into trading. It is a fact that if you buy after a move up, you might make money in that instance. You might do it 5 times and make money every time. But if you did it 1,000 times or even 100 times, you would see what is known as the variance play out. In other words, the string of results, the win and loss. Over time, you would lose money. Okay, so that's what it's all about. It's not about 1 or 2 trades. People seem to think it is. Lots of people think, even if you made a lot of money on one trade, eventually you'll lose everything. Okay, because it's never about one trade in the markets. It's about many trades over many years. And I explain that to my Academy members all the time. So anyway, you had a fall from here, clearly reflecting on this minor price action, and therefore my short bias really would be around this level. I do think that it is short now. I already have a short bias, but if you really want to be picky, you could wait another 20 points. Okay, I'm not entirely fussed, but I like it short anywhere from now to there, but I think you'll probably get there at some point. The key thing here is that you've come up so quickly, okay? So many green candles. Like I said before, after a large move, what happens? Okay, this one, let's take it for example, 4120 over here. 4120, and it goes all the way up. Let's just call it 4620. 500 points straight up. What happens? Down. down right to the beginning, 500 points. Okay, takes several weeks up and it takes several weeks down. Nonetheless, it gets there. What happens this time? 400 points up. Okay. Soon to be 450. So what are you going to do? How many times does the market go up that much without falling? Just look back on your charts and try and find that for me. Yeah. Same thing here, 500 points, whack, straight down. Okay, this is the recurring theme of the markets. 600 points, whack, straight down. So you're 450 points, you're getting on to the standard 500 or 600 points. So you've got to ask yourself, is it really more likely that it's going to go up than it is down? Based on what I can see already, based on the probability of this. We're looking at it together now. There's no dispute. Okay? So just understand that your weekly is on the 4th week up. There's no red candle yet. Your bias should not be to the long side. Unless you're waiting to get absolutely roasted and you want to buy high. That's up to you. I won't be buying high, I'm afraid, to disappoint you. But it's me. Fall back to 4420, I might consider lightly long scaling if the overall market sentiment is putting us up at that point. Anything lower nearer 4200. So I'll now roll over to the Nasdaq. I normally do them together because they look relatively similar. I've also got my coffee at this point. I tend to lower the caffeine amount as we roll through the day. Anyway, again, 14,000 points to 16,000 points, 2K points, basically straight up. If you look at your weekly, you're on week 4, just like your S&P. Cast your eyes to the left-hand side, where you have this. And what happens over here? Again, what is it? Oh, there's a massive red candle there, massive red candle there. Suddenly, your trajectory changes. So you've got COVID. Everyone says, wow, things are fantastic. You had this big drop in price and it goes up, 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 and up. There is, however, drops back, but in the absolute strongest market sentiment, eventually, what happens? Okay, you get something like that, right? Now, if it does appear that the Fed Reserve decides to say, well, you know what, things aren't as good as what we thought, you may find that this is just another long-term downtrend. But in either case, whether it is or it isn't, it doesn't really matter. Okay? All you're looking to do is short before the fall. And you can only do that after the price has come up significantly. It has come up 2,000 points. You should not be buying it. Okay? This fall, and much like your S&P, I think you'll get higher, but this fall has done nothing. You're pushing right into this previous high. So I wouldn't be shocked if you get higher than that. Okay, I wouldn't be shocked at all. And once you start, and it's really important this as well, you're now going to start coming in to where you previously fell. Okay, and you fell an awful long way, as you'll remember, or you don't need to remember. You can see it on my chart now. Anything up here in line with this long-term short entry is ideal, really, and it's about 16,100. So I would say if you get above this high, I would start to look short into the market further. I think ideally you'll get as much as a pullback to this area of early support. Okay, probably about 700 or 800 points at the time. But look at these key moving averages again. You're very much far off them. Price is above average, therefore. Okay? You're not below average where you would get long. You're above average where you would like to get short. I wrote a blog on this last week. You know, if you picked people at random, on average, you would get an average height person. But occasionally, you'll get a really tall person or a really short person. Okay, that is how data deviates between the lows and the highs over time, like a big wave. That is what causes these moves. Ultimately, your trends break, okay, because the market changes, the market sentiment changes, people become buyers when the economic reports come out. You know, they said of inflation, it might drag things up. And this is what I really like to talk about. So make sure you listen. If you're on here now, open up your ears to this because it's so important. I honestly mean that. It's so important. You'll notice at this point, the market breaks out of this downtrend. Okay. In other words, the market says, okay, we've come down, we've downtrended, we've got our negative oscillation, okay, since July, the summertime, right? If you draw your lower parallel line, it's going to look something like that, okay, roughly. Two lows connected, and you've got the two highs. Now, there would have been many traders who saw this and said, you know what, I'm going to buy. I'm going to buy it. Now, it comes in line exactly as I said before. That would have caused you to take profit if you had closed it. But that one instance is rare compared to all the times you'll trade breakouts. And you will lose money doing it because you're buying after the move up. In this instance, this rare case, yes, you would be right. And lots of people who trade breakouts would have said, whoa, I got this absolutely right. But there's a million times if you go back where you are not right, you are awfully wrong. Okay? So just be very, very aware of that. That is the falsity of breakouts. You're buying after the price has gone up. Yes, it was right now, but if you took 10 trades, 100 trades, 1,000 trades, would you statistically be right buying highs? No, is the answer. And it's provable. It's more than provable if you look across the board. Okay? You could even say that some people would have seen minor breakouts on this, right? And they would have bought that. Okay, so just remember markets oscillate statistically like this. They don't always break out. Okay, but even so, naturally, if you're buying a breakout, you're buying a higher price. Statistically, that has been shown. It's not even my word. That has been shown to not work on every single market, on every single asset forever. Okay, so just be fully aware of that because that is fact. You can see it on any chart. If it weren't the case, everyone would trade breakouts, everyone would make money every single time. It's just not how it goes. So I'll do the Dow. If there's any, I know some people like trading the Dow. If there's any particular ticker, I can go over it. Okay. And you've got the same thing here. I drew it previously. You would be far better off shorting statistically at these points than the one time that you got long. Okay. And again, you can see because if I draw trend lines like this, right, you would have bought the breakout, wouldn't you? And it goes wrong. But no one remembers when it goes wrong, do they? Everyone says, you know what, just forget about it. It's okay. And then they probably would have done the same thing over here. So statistically, you're just simply better off shorting the top of price channels like the market wants you to. Okay. Occasionally, the pullback was fine to get long. If you bought here, you would only get back to net zero. But the one time it breaks out, you would be right. The many times it doesn't, okay, you would be wrong. Statistically, that's what happens. So that was good long on a pullback to key moving averages via tech zones. What you've now got is very much similar to your other indexes. Okay, the S&P, the US100, it's all very much hand in hand. They're all US markets. But I think you will get slightly further above this high similarly. I don't think this is done just yet, but nonetheless, all of it you should be short biased in my opinion. I think it's very much getting to the point where it's come up and up and up and up and up and up. Market sentiment has got to change at some point, and when it does, often after a larger move, it's extremely forceful. That is why you saw, if you go back to post-COVID, okay, that's why you saw such a pullback, right? So you had, it's actually the tick is a bit problematic, but you can see November 2020 to Jan 22, and then you get this big retracement back. And it's because the move up was so large. There's such a gap to fill that the market retraces enormously, 0.786 fib back to key support rallies. again. So you can see the month we've had is going along with that. But the market is relatively sideways on this view for a considerable amount of time. You are only at this point, the end of 2022, start of 2023. So simply what I'm saying is, obviously that's not falling a lot. You don't have incredible market news today, so whether much happens today or not is yet to be debated. But I think you will get slightly higher. I don't think it's done yet. I think it would ideally be the case that you may find a little bit of further uproom. Okay, you can see that near the 35 too. But nonetheless, anything really around this area for me constitutes short. I think you're impending a change in market sentiment across your indexes, and therefore I think is where you will go. So don't forget to get my free training. That's the US indexes. I'm now